After ensuring adequate resources, the second broad area of board oversight regarding school finances is financial management. We'll now explore why financial management by the board is so critical. Financial management or oversight is critical because the board is responsible to see that public funds are used for public purposes. And who's included in this public to which you are accountable? That would be the general public, Department of Education, parents, students, and staff, and your authorizer. Financial management is critical so that you maintain the integrity of the school. It's also critical so that the school can maintain a clean audit, which is required to be submitted to the state, your authorizer, and made publicly available. And lastly, this role is critical to ensure the long-term viability of your organization. After ensuring adequate resources, the second broad area of board. So how does the board assess the strength of its financial management and oversight? They start by hiring knowledgeable staff, which may include internal staff or a financial management company. Next, the board needs to require monthly financial reports from administration. While the level of detail may vary based on the organization, some of these reports would include a cash flow report, fund balance report, income and expense report, or a balance sheet. In addition, the board needs to ensure that internal control policies are in place. These policies may include things such as a check signing policy, a policy on the handling of cash, and job descriptions that allow for separation of duties. Lastly, the board needs to ensure that they approve both a short and long-term budget. In most cases, this includes at least a 5-year projected budget. There are a number of items for which the board should pay particular attention when it comes to their financial oversight. A monthly cash flow analysis or report will help the board to know if the school will have enough cash on hand to pay their bills in a timely manner. The fund balance report helps the board to know that they have a reserve account to address long-term or emergency needs. Note that the fund balance is not necessarily the same as cash flow, as it is often based on projected or anticipated revenue. There are a number of red flags that point to financial concerns within an organization. Following this lesson, you will find a list of items identified by the Nonprofits Assistance Fund. We encourage you to open the file in a separate window, download it, and use it with your board to test your school's financial viability. There are a number of structures your board should have in place to help them focus on their financial responsibilities. Those might include clear job descriptions for those providing the daily oversight of finances, ensuring proper separation of duties and clear accountability, a finance committee that works with administration to provide financial oversight, a plan to ensure that the board continues to be educated on school finances, and a development committee that helps to ensure a board's education plan, but also works to ensure that new board members are being prepared to fill open board positions. This may include a plan to ensure that there are people with financial background and skills running for board seats. So what is the board's role in financial management and oversight versus the role of the finance committee and administration? While this may vary slightly by the structure of your organization, the following chart breaks down those roles for you. You should notice a pattern in responsibilities. For example, if the administrator's role is to prepare and present the budget, the finance committee's role will be to review the budget and make recommendations. The board's role would then be to understand and approve the annual budget. If the administrator's role is to prepare the long-term projections, the finance committee's role will be to revise the projections and make recommendations to administration and the board, while the board's role will be to approve the projections. If the administrator's role is to present internal control policies and carry out those policies, the finance committee's role would be to review, amend, and make recommendations related to those policies and monitor implementation. The board's role would then be to approve those policies and ensure that they encompass sound risk management and accounting practices. Following this lesson, you'll be completing a quiz on financial management and oversight, giving you an opportunity to apply what you've learned about the roles of the board, the finance committee, and administration in financial management.